The US dollar slipped to the lowest level since November. In the testimony at the Senate, the Fed's chairman again acknowledged a robust economic recovery. However, we gave no clear indication that the Fed was in a rush to speed up plans for tightening monetary policy. This discouraged the dollar bulls. What other events could also serve as market catalysts in the coming days? Let's discuss the economic calendar on InstaForex TV channel. On Thursday, January 13, market participants will find out important data to evaluate the US economic conditions. Following the consumer inflation data released on Wednesday, traders will get to know the producer price index for December. Factory inflation sheds light on a further trend in consumer prices. The PPI is expected to accelerate again with an annual spike to 9.8%. This record high figure will remind traders that the US monetary authorities pledged to take countermeasures against soaring inflation. In other words, the market is pricing in a few rate hikes this year. Investors are speculating on the likelihood of monetary tightening at the policy meeting in late January. Besides, the US Fed judges whether the economy is ready for higher interest rates by conditions in the labor market. As usual on Thursdays, traders monitor a weekly update from the US Labor Department. According to flash estimates, the number of initial unemployment claims stayed roughly flat last week, consolidating at about 200,000. Analysts do not expect a contraction in continuing jobless claims as well. Nevertheless, the US dollar will have an excuse to regain its footing. On Friday, traders will find out fresh evidence of a global economic recovery from China's report on its trade balance. Indeed, China is the prime supplier of consumer goods around the world. In this context, the volume of China's exports is viewed as a barometer of the global consumer activity, the main driving force of the world's economy. Experts suppose that the foreign trade balance widened its plus in December. In the previous report, the trade balance locked a slightly lower surplus due to the firm yuan and weaker global demand on the back of the last spread of the Omicron variant. Besides, China expanded its imports in November. The fresh report is likely to encourage investors, arousing the risk-on mood. It's certainly bullish for the risk-sensitive Australian dollar as the currency of the country exporting the lion's share of commodities to China's industry. The report on the UK industrial production will contain less positive data. The British industry is projected to slow down its annual pace of growth to 0.5% in November. Of course, this will disappoint traders, so the market will see short-term selling of the pound sterling. On the contrary, the US industrial sector is keeping the momentum going. The industrial output is extending growth. Its expansion could have accelerated to 5.4% in December on year. The thing is that the market will hardly respond to this data because the top priority for traders will be the report on major importance, which is due later on Friday. Market participants are alert to retail sales because consumer activity accounts for nearly two-thirds of the whole national economic output in the United States. In other words, the report will enable investors to judge the current conditions in the US economy. The consensus suggests a zero change in retail sales in December from a month ago, though the annual rate could remain at 17%. Nevertheless, stagnation in consumer activity around the Christmas sales could take the shine off dollar-denominated assets. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.